Alrighty, hello YouTube world. This is Viri coming to you from Prestige Insurance. And today the topic of conversation is trucking auto liability insurance. What is it? Why do you need it? How much does it cost? And what does it do? So we're going to start with who does auto liability cover. So if you're going to the FMCSA or the Federal Motor Carrier or your local DOT, there's a requirement that the DOT is going to have in order for you to activate this DOT. This requirement is going to be the insurance that covers the general public. And this is true in most cases. However, there are some type of businesses that would veer off of this a little bit, like household goods movers or hazmat haulers. Basically, the federal government wants to make sure that we're covering the general public for any type of damages that we may cause to them. So they're looking for two specific areas. One is going to be any bodily injury harm, and the second one is going to be any type of property damage. So when you talk about auto liability insurance, it's typically split up in these two different type of coverages. Bodily injury is going to cover against any type of bodily harm that you may cause to somebody else in an accident that was caused by yourself, that it's your fault. And property damage is going to protect or pay out any claims towards the property that you may have damaged that belongs to somebody else. Just to be clear, property damage and physical damage are commonly mistaken, but property damage under auto liability covers the other person's property, not yours. When you look at commercial insurance or commercial auto liability insurance, it's written as a combined single limit. Typically, some states are going to require personal policies to be written as split limits, like 10,000, 20,000, 10,000 here in the state of Florida. When you're talking about commercial insurance, it's written as one major limit. The most typical requirement that the FMCA looks for is a $750,000 minimum limit for most type of trucking companies when you're crossing state lines. Now, a lot of brokers are going to require that $1 million limit, but when you're talking about this major limit of $750,000, it's covering those bodily injury claims or property damage claims in the case of an accident when it's your fault. Everything is going to be combined into this one limit. This is where most people are seeing that $1 million limit because that's what most brokers require. There's different type of symbols that you can write on your auto liability coverage. In commercial, there's several symbols, but the most common symbol you're going to find is symbol 7. What these symbols do is that they clearly indicate who is going to be the covered person or covered auto in the terminology under a policy. So symbol 7, what it specifically states is that it's a scheduled policy. This means that every truck or driver on the policy must be scheduled in the form of a VIN number, a driver license number, year, make, and model, but it has to be scheduled. If it's not scheduled, then it wouldn't be a covered auto on the policy. Some other symbols include hired auto, non-owned auto, or even any auto for those bigger fleet policies. It's important that you get the right insurance agent and they analyze any type of contracts you have because you don't want to buy auto liability insurance that doesn't cover what you need to meet any contractual requirements. The limits, like I said, are usually a minimum of $700 to $1 million. Now, depending on what you haul, if you're hauling for somebody or for yourself, it can be as low as 300. Some people require 2 million or more, and that's where you start getting some reinsurance companies or umbrella policies where it's going to cover a little bit more. But typically, you're looking between $750 to $1 million. And deductible. What is a deductible? A deductible is the portion of the claim that you are responsible for. Depending on what type of insurance carrier you have, whether it's admitted or non-admitted, or if it has taxes, or there could be a different type of deductible. Most policies are a first dollar policy. What does that mean? That means that when you get into an accident that's your fault, there is no deductible. Most auto liability policies that are with an admitted paper, and we can get into that in a different video, are going to be first dollar. That means nothing comes out of pocket, and basically the insurance company is taking full responsibility. Now, if you have a deductible means you have to pay this amount of money before the insurance portion pays their part. I would say on average, most insurance policies are going to have between $1,000 to about $5,000 deductible. That means if there's a $10,000 claim because you damaged somebody's car, you're paying the first 1,000 and the insurance company is going to pay the other 9. Obviously, if it's a $5,000 deductible, you would pay the first 5 and the insurance company would pay the remaining 5. So the lower the deductible, the less um, the less liability you're going to have on yourself, but typically the lower the deductible, the higher the premium on the policy. And finally, when you get this auto liability insurance, the insurance carrier needs to communicate with the federal motor carrier, the FMCSA, that you have obtained insurance. And in layman's term, the way that they communicate, this type of communication is done by federal filings. The most common federal filing out there, it would be called the 91X. And this, what it does is that it's letting the insurance carrier tell the FMCSA or the DOT, hey, this person has insurance. We're financially responsible for them, and they meet the requirements that they need to meet in order to activate that DOT. This typically happens within 24 to 48 hours, and most federal filings are done electronically. This is also something we can get into a different video, but this is a brief overview of what trucking auto liability insurance is. Thank you for tuning in today, and we'll see you on the next video.